Hey, good afternoon. Jeremiah Conjure here with AnnuityAssociation.com. And we're back to bring you another exciting unbiased annuity review. Really excited about the product that we're going to be discussing today. It is one of the best-selling fixed indexed annuities of all time, and with great reason because of the immense features and benefits that can help many retirees out there. This particular product is going to be the Allianz 222 fixed indexed annuity. Allianz has been a leader in the fixed indexed annuity space for quite a while, and they continue to be innovative and really just creative when it comes to bringing some unique product features and benefits to the retirement communities. So without further ado, I'm going to go ahead and delve into our particular disclaimer for Annuity Association, and then we'll get started into the specific product review. Want to thank you today for joining me. All right, so bear with me. I'm going to go ahead and share my screen here. All right, here we go. Hopefully you can see that. All right, again, we're discussing the Allianz 222. This is a fixed indexed annuity independent review brought to you by AnnuityAssociation.com. This is a review, not a recommendation to buy or sell an annuity. Allianz has not endorsed this review in any way, nor do we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of AnnuityAssociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. Okay, so we got that fun stuff out of the way. Thanks for bearing with me while we got that taken care of. Now I'm going to go ahead and get started with the product review for the Allianz 222. If you haven't watched any of our reviews before, we dive right into the features and benefits and understanding the mechanics of the annuity and how it can potentially be a great tool for people entering retirement. We'll also take a look at an example illustration later on in the review to give you an understanding of how the numbers unfold on a ledger so that you can identify the features and benefits and how they work on a ledger from a ledger perspective. And that's pretty much it. So the idea is just to bring more transparency through education so that you can make an educated and informed decision on whether this annuity or any annuity for that matter is right for you. If you'd like to work with me directly, I do work with clients in all 50 states, and I'd be honored to have the opportunity to see how I can help. If you'd like to work together, you can visit our website at AnnuityAssociation.com. Right there on the main page, click the red button to request your free virtual meeting via Zoom, and we can bring this annuity and the features and benefits and have a discussion to see, how it can potentially be a good fit for you. And we do that all from the comfort of your own living room because of the platform that we use, which is called Zoom. If you've never used Zoom before, no worries there. I've helped people as old as 90 years old, 90 years young, get on a Zoom meeting. So if they can do it, you can do it too, and I'd be happy to help you with that. So, excuse me. Okay, so hopefully I didn't blow your eardrums out there with that cough. I do apologize, but I'm going to go ahead and share my screen now to get into the exciting PowerPoint that we have lined up for you today. Okay, so let me get rid of that. That's the wrong screen. Get rid of this one. Hold on one second. Technical difficulties. Okay, here it comes. Well, I had it up. Give me 1 second. I thought I had it up already. It looks like I might have exited out of that. So just take 1 second here to pull it back up. Thanks for your patience. We do these live, so you can see that I'm not an official professional spokesperson. nor am I a technologically savvy individual at times, but I try my best to be so we can help you understand these products better. Okay, so I think I've got it figured out. Here we go. Let's share this part of my screen again. Portion of screen, share. Okay. All right, hopefully you can see that there. Okay, so welcome again. My name is Jeremiah Conger. For those not familiar with who I am an independent annuity advisor. I am the Chief Executive Officer of AnnuityAssociation.com. We are an independent annuity advisory firm specializing in fixed annuities, and we operate in a very transparent and educational manner. And today we're discussing the Allianz 222 fixed indexed annuity from Allianz Life Insurance Company of North America. So retirement is the next great phase of life, the start of a new adventure full of promise. Most people spent their entire adult lives diligently working and saving for this moment. I'm sure you have already imagined what their future might look like. But whatever the goal, one thing is very apparent: retirement has changed. And so has the role in preparing for it. A greater responsibility has been placed on Americans saving for their future, and with this greater responsibility may come some uncertainty. It's natural to be concerned about saving enough for retirement, but it's important to have an income strategy for retirement too. Today, I'm going to introduce an interesting fixed indexed annuity and income rider combination that can help address both of these concerns. Thanks for joining me today. So on our agenda today, we'll start by going over the knowns and unknowns of today's retirement, which will lead into the discussion of the benefits of fixed indexed annuities. And we'll also discuss the key concepts of the Allianz 222 annuity, which provides a built-in income benefit with no additional fee, known as the protected income value, or what we may refer to as the PIV. We will cover some of these benefits in this presentation. And for more information regarding this product, its benefits, and additional features, please refer to the Allianz 222 Annuity Consumer Brochure, the brochure insert, and the Index Allocation Options Guide or appropriate variation of. If you'd like either of those documents, feel free to contact me directly by going to AnnuityAssociation.com, and I'd be happy to help you with that information. Now, more than ever, the key to creating the retirement lifestyle wanted is a strategy that takes into account not just what we know about retirement in the future, but what we don't know. And the things we know about retirement is retirement is expected to last longer due to increased life expectancies, and that retirement will cost more due to inflation, and managing the tax burden will be more important than ever before. The things we don't know about retirement are things such as Social Security and the long-term solvency, whether or not there will be a change in inflation and tax rates, and how volatile the market will be and its effect that it will have on our retirement savings. With so many uncertainties, there is a company people turn to for help in creating a level of certainty in their retirement years ahead. And when it comes to retirement solutions, the one thing to know about Allianz Life Insurance Company of North America is that they're more than one thing. They have a portfolio of fixed indexed annuities which offer different solutions that can help with many retirement concerns, including increasing income potential, which may be available through optional riders at an additional cost to help people address the effects of inflation. Asset protection to help people preserve a portion of retirement savings from market volatility, and tax control to help manage assets with more efficiency and flexibility using several distribution options of choice. Some tax control options that people can benefit from when it comes to a fixed indexed annuity include, but are not limited to, tax deferral so people can better determine when to pay taxes on any increase in value, tax-free transfers between allocation options, tax-efficient death benefit planning, and/or tax-predictable distributions. So let's take a moment to look at the benefits of the fixed indexed annuities. A fixed indexed annuity offers a unique combination of benefits that can help people achieve long-term goals. Fixed indexed annuities often offer tax deferral, interest accumulation potential, and protection benefits to help protect retirement assets and income. Let's first look at tax deferral. Under current federal income tax law, any interest earned in an annuity contract is tax deferred. Tax deferred growth, which can compound over time, may increase the amount of savings and income a fixed indexed annuity generates for retirement. Tax deferral is also a benefit of traditional IRAs and 401ks. However, non-qualified annuities don't have any government-imposed contribution limits. And because of that, annuities can often be a good choice to save more than IRAs or 401ks allow and still enjoy tax-deferred growth potential. Please note that premium payments made to a non-qualified annuity are made on an after-tax basis. Some annuities may limit the number of years in which additional premiums are permitted, and purchasing an annuity within a retirement plan that already provides tax deferral results in no additional tax benefit. So use an annuity to fund a qualified plan based upon features other than tax deferral, such as lifetime income options or the guaranteed death benefit. Another benefit of a fixed indexed annuity is indexed interest potential. This is the opportunity to accumulate interest based on positive changes in one or more external market indexes. Because of this potential indexed interest, fixed indexed annuities provide a unique opportunity for accumulation. Along with the indexed allocations, there is also a fixed allocation. Finally, let's look at protection benefits. Fixed indexed annuities offer protection benefits that can help protect in several ways. These are through accumulation, which protects assets from market downturns, and guaranteed income, which helps protect income guaranteed for life, and through a death benefit, which may provide help for loved ones after the contract owner is gone. Keep in mind that withdrawals will reduce the contract value and the value of any protection benefits. Additional withdrawals taken within the contract withdrawal charge schedule will be subject to a surrender charge and may be subject to a market value adjustment. All withdrawals are subject to ordinary income tax, and if taken prior to 59.5, may be subject to a 10% federal additional tax. The next slide will provide some more details. With accumulation protection, principal and credited interest are protected even if the markets go down. The annuity contract cannot lose value due to market declines. And guarantees, then there is the guaranteed income. This is protection from the possibility of outliving assets. And as I mentioned before, an annuity is the only financial vehicle that can offer this. These guarantees can transfer risk to the insurance company. Fixed indexed annuities can help protect assets, retirement income, and beneficiaries. It's important to remember that all guarantees are backed by the financial strength and claims paying ability of the insurance company from which a fixed indexed annuity is purchased. Receive interest credited to the contract. Any interest credited to the contract is locked in and protected. Annuities are subject to the withdrawal charge periods, which can vary, but are generally between 5 and 10 years in duration. And some annuities may also be subject to a market value adjustment. As long as the contract owner abides by the terms of the contract, they will not lose any of the money placed in the annuity or any interest credited to the contract due to the withdrawal charges or the market value adjustments. And you can receive guaranteed income. A fixed indexed annuity helps put them in control of their future income based on the annuity chosen and how much money is put into it. After the contract has had an opportunity to earn interest over its deferral period, distributions can begin. The contract values can then be received in a stream of income that will last a lifetime or longer. There are generally two choices for receiving income payments: annuitization payments or lifetime income withdrawals. Annuitization payments and lifetime income withdrawals are taxed differently, and a tax advisor should be contacted to discuss the differences. Finally, for those looking for death benefit protection, fixed indexed annuities provide a death benefit before annuity payments begin. That can be passed on to beneficiaries. If the contract owner passes away before beginning to receive scheduled annuity payouts of the contract's value, the beneficiary will receive a death benefit. Their beneficiary may choose to receive the contract values in a single lump sum payment or in a series of payments over time. The death benefit may be a reason some individuals purchase annuities even though they have no immediate plans to receive their contract values. They simply want to know the money is available, and it may be subject to a withdrawal charge or market value adjustment should they need it, and that it can be passed on to their beneficiaries if they don't use it. And in some cases, even if the contract owner passes away after they've begun to receive income from their annuity, it's still possible their beneficiary will receive a continuation of those payments depending on the contract and options chosen. So we've talked about the knowns and unknowns of retirement and why increasing income potential, asset protection, and tax control may be important to many people. We also looked at the benefits of fixed indexed annuities. Now we'll look at the Allianz 222 annuity and how it may fit into a retirement income strategy. For more information regarding this product, its benefits and additional features, please refer to the Allianz 222 annuity consumer brochure and brochure insert. And if you'd like me to send those documents to you, I'd be more than happy to. Just visit our website at annuityassociation.com and schedule a time to speak with me or give me a call directly, and I would be happy to help you with that. So people have varied financial objectives, there's no doubt, all unique to them and to their circumstance. The Allianz 222 annuity can help meet some of these objectives and become an important component of their financial approach as they prepare for retirement. The Allianz 222 annuity may be of interest to someone if they're seeking to begin lifetime income withdrawals later, preferably after 10 years, and if they're looking for principal protection from market downturns and potential for tax-deferred growth, and if they want a combination of guarantees and opportunity for indexed interest to help increase the income value before they begin taking income. And after 10 years of building their retirement savings, they want the flexibility to change their minds if their needs change. These include the potential for increasing income offered by a built-in income benefit, available with no additional fee, to help provide a flexible income opportunity for their retirement savings. And finally, many people who choose lifetime income withdrawals can benefit from a premium bonus and an interest bonus to help bump up their retirement savings, and may consider the 222 annuity as an addition to their current retirement strategies. We will be examining these bonuses in more detail later on in this presentation. Keep in mind that bonus annuities may include higher surrender charges, longer surrender charge periods, lower caps, higher spreads, or other restrictions that are not included in similar annuities that don't offer a bonus feature. Before we look at the product features of the Allianz 222 annuity, let's start with the two different ways to potentially earn interest. Allianz 222 offers the choice to earn fixed interest or the choice to base potential indexed interest on changes in a number of external market indexes, or a combination of both. Fixed interest allocation, Allianz calculates and credits fixed interest daily based on the rate we establish, or they establish at the beginning of each contract year. This credited rate can be raised or lowered annually, but will never be less than 0.10% per year. Indexed interest options, Allianz calculates and credits indexed interest annually based on changes in the contract owner's choice of these external market indexes. Although an external index may affect the interest credited, the contract owners are not buying shares of an index. These indexes are the S&P 500 index, NASDAQ 100 index, Russell 2000 index, Bloomberg US Dynamic Balance Index 2, PIMCO Tactical Balanced Index, BlackRock IBLD Claria Index, Bloomberg US Dynamic Balance 2 ER Index, PIMCO Tactical Balanced ER Index, BlackRock IBLD Claria ER Index. So you can choose from several options for flexibility and tax-deferred interest growth potential, In each contract anniversary or multi-year crediting period, the contract owner chooses how much to allocate to which option in 1% increments. Annual reset and multi-year resets are common fixed indexed annuity features and apply to the Allianz 222 annuity. Annual reset applies to annual crediting periods, while multi-year reset applies to multi-year crediting methods. We will look at crediting methods in the next few slides. Here's how annual reset and multi-year reset works. At the end of the contract year, at the end of the contract year, where am I? I lost my place here. At the end of the contract year or multi-crediting year, the contract's owner indexed annuity values are automatically reset. This means this year's or multi-year crediting period's ending value becomes next year's or multi-year crediting period's starting value, locking in any interest the contract earned during the annual or multi-year crediting period and ensuring that the contract owner does not need to make up losses in an index before they see additional credits in the future. So a negative index return 1 year or multi-year crediting period will not affect the following years or multi-crediting periods' potential to earn indexed interest. Annual reset also locks in any interest the contract earned during the year or multi-year crediting period. The contract owner's principal and credited interest have protection against market losses, and the indexes available within the contract are constructed to keep track of diverse segments of the US or international markets or specific market sectors. These indexes are benchmarks only, and indexes can have different constituents and weighting methodologies. Some indexes have multiple versions that can weight components or may track the impact of dividends differently. And although an index may affect the contract owner's interest credited, they cannot buy, directly participate in, or receive dividend payments from any of them through the contract. Speak to a financial professional for current allocation option availability. And for more information regarding this product, its benefits, and additional features, please refer to the Allianz 222 Annuity Consumer Brochure and Brochure Insert. Okay, along with 9 indexed interest options and a fixed interest allocation, the Allianz 222 annuity offers a choice of 5 crediting periods, which determine how much interest is added to the annuity based on the changes in an external index. This chart depicts the crediting methods relative to the sensitivity and interest potential. It is intended only as an overview and is not a recommendation. The following are descriptions of each of the crediting methods. These crediting methods are annual point-to-point with a cap, a spread, or a participation rate, 2-year point-to-point with a participation rate, and monthly sum with a cap. Remember that no single crediting method is best in all situations. In some market conditions, one crediting method may result in more interest than others, or 0 in a given year or crediting period. Also, keep in mind that the contract owner can choose a combination of crediting methods. The first one here is the annual point-to-point with a cap. For this crediting method, we will compare the index value on the last business day before the contract anniversary, as well as the last business day before the contract is issued, to the index value on the last business day at the end of the contract term. We'll then divide this change by the index value at the beginning of the contract year to get the percent of change. And then next, we apply the contract's annual cap or maximum. If the positive percent of change exceeds the annuity's annual cap, the index interest rate will be the annual cap percentage. If the percent of change is negative, the index interest rate for that year will be 0. Allianz may raise or lower the cap annually, but the annual cap will never be less than 0.25%. Annual point-to-point with a spread. For this crediting method, Allianz subtracts the contract's annual spread from the annual change to determine the contract owner's index interest rate for that year. If the final result is negative, the index interest rate for that year will be 0. Allianz may raise or lower the spread annually, but the annual spread will never be more than 12%. For the third strategy, we have the annual point-to-point with a participation rate. And for each indexed interest option with this method, Allianz starts by setting an annual participation rate. And for each index, they look at the change in the external index for the contract year, and then multiply the annual change by the annual participation rate. If the result is a positive number, that number is the interest rate for that contract year. And if the result is 0 or less, the contract owner's interest rate will be a 0. The annual participation rate can be reset every contract year, but it will never be less than 5%. Annual point-to-point with a cap, spread, or participation rate may be a choice for contract owners who want to help minimize the effects of mid-year market volatility. There is also number 4, which is the monthly sum with a cap. On the last business day before the contract anniversary each month, as well as the business day before the contract is issued, Allianz will compare the index value to the prior month's value. They'll then divide this monthly change by the prior month's value to get the monthly percentage of change. Positive monthly changes are subject to a monthly cap or a maximum. However, negative changes are not limited by the cap. Allianz can raise or lower the cap each year, but it will never be less than 0.50%. At the end of the contract year, we'll add up these monthly increases and decreases to calculate the indexed interest rate. If the sum is negative, the contract will receive 0 indexed interest for that year. The monthly sum is the most volatility sensitive crediting method. It can help provide interest in steady up markets, but it can also have adverse effects by large monthly decreases. Crediting method number 5 is the 2-year point-to-point with a participation rate. For each indexed interest option with this method, Allianz starts by setting a participation rate for the crediting period of 2 years. For each index, they look at the change in the external index for the crediting period and then multiply the change by the participation rate. If the result is a positive number, that number is the interest rate for that crediting period. If the result is 0 or less, the interest rate will be 0. The participation rate can be reset every crediting period of 2 years, but it will never be less than 5%. And since the 2-year point-to-point uses the index values from 2 points in time, 2 contract years apart, this may be a good choice if the contract owner wants to help minimize the effects of volatility between those 2 points. This chart depicts the crediting method's relative sensitivity to index volatility and interest potential. It is intended only as an overview, and as stated earlier, no single crediting method is best in all situations. In some market conditions, one crediting method may result in more interest than the others, or 0 interest in a given year or crediting period. The Index Allocation Options Guide offers a more in-depth description of each crediting method or appropriate variation. So when looking at a fixed indexed annuity, it is always important to know what the participation rate is. So let's take a moment to talk about participation rates. The participation rate for the annual point-to-point with the participation rate is declared annually. And the participation rate for the 2-year point-to-point is declared at the beginning of the 2-year crediting period. As previously mentioned, the participation rate for these crediting methods can be reset every contract year or crediting period, but will never be less than 5%. All other crediting methods have a participation rate of 100%. These are the annual point-to-point with a cap, annual point-to-point with a spread, and monthly sum with a cap crediting methods. 100% participation means that we use the entire percentage of index change when we calculate the indexed interest rate, and it's guaranteed for all contract years. Keep in mind that the contract owner's indexed interest rate generally will not equal 100% of any increase in the index, since a cap or spread may limit the amount of indexed interest they receive. So what if the contract owner changes their mind regarding their choice of a fixed interest allocation or an indexed allocation and their corresponding crediting methods? That's not a problem at all. Shortly after the end of each crediting period, Allianz will notify the contract owner that they can change their allocations, whether it be the fixed interest or an indexed interest option or in crediting method. The contract owner can change any allocation that has reached the end of its crediting period by sending a request to Allianz no later than 21 days in the new crediting period. They can also send a request to change their allocations at other times, but the request won't be processed until the beginning of the next contract year, or if the 2-year point-to-point is chosen, the next 2-year crediting period. The index lock feature gives you the flexibility to track and view index values online and initiate index value locks on select indexed interest allocations anytime during the crediting period. This can help minimize the effects of midterm market volatility while also providing the opportunity for positive index credits. The index value used to determine interest credited may be higher or lower than the index value at the time of the request. Then there are 2 ways to activate the index lock. The first way is to automatically auto-lock or use the auto-lock feature. Simply set the index interest rate percentage you wish to target. You can set both upper and lower targets as long as you set them above or below than the current index interest rate percentage. If your allocation options index interest rate percentage reaches the target, auto-lock will automatically lock in the index value until the end of the crediting period. You are also free to adjust the target index interest rate percentage either up or down as many times as you wish, as long as auto lock hasn't been activated during that crediting period and your upper target is greater or lower target is less than the current index interest rate percentage. And it's easy to administer to just log into the online client account service and set or reset the auto lock. The second way to activate index lock is a manual index lock. If a lock has not already taken place, simply request a manual lock anytime within the crediting period. Both options make it easier for clients to receive a positive index credit in volatile markets, and both options can easily be done within Allianz's secure website. Index lock is available on select index allocations. So this slide puts all of those choices together. The Allianz 222 offers 9 different indexed interest options and 4 different crediting methods, plus the fixed interest allocation. All totaled, there are 18 different indexed interest allocations, plus the fixed interest allocation from which to choose. And as we've said in the previous slide, these allocations can be changed each contract year or crediting period for 2-year point-to-point allocations, as long as the request for change is received within 21 days after the contract owner's contract anniversary or crediting period. And if the request is received more than 21 days after their contract anniversary or 2-year anniversary, when choosing the 2-year point-to-point, it won't take effect until the following contract year or 2-year crediting period. Now let's look at what the Allianz 222 annuity offers. First, it offers 2 ways to receive a bonus to the contract's protected income value, which I will describe in more detail here in future slides. Second, the Allianz 222 annuity offers 2 ways to receive income increases while receiving lifetime withdrawals. And third, it offers 2 ways for beneficiaries to receive the contract's death benefit. All these features are part of the annuity with no income riders, income rider fees, excuse me. So let's start with the bonuses to the protected income value. First, let's discuss what the protected income value is. The protected income value, or PIV, is a value specifically designed to be used for lifetime income withdrawals. The PIV is comprised of the premiums, credited interest, plus any premium and interest bonuses that we're about to discuss. Lifetime withdrawals based on the protected income value are available after 10 contract years between the ages of 60 and 100. And the protected income value is included in the Allianz 222 with no additional fees. It is important to note that the contract's accumulation value is comprised only of the contract owner's premium and any credited interest. It does not include any of the premium or interest bonuses. The next slide takes a look at the contract owner's access to their accumulation value if taken within the first 10 years. So let's talk about the first of 2 bonuses available within the Allianz 222 annuity. First, to help accumulate for retirement, all premiums paid in the first 18 months will receive a 25% premium bonus credited to the protected income value. In this example, we are assuming that the contract owner made a total of 3 premium payments in the first 18 months. In addition to the 25% premium bonus, a 50% interest bonus is credited to the protected income value each year or crediting period in the case of the 2-year point-to-point allocations that interest is earned. For example, if the allocations chosen by the contract owner earn 3%, an additional 1.5% interest bonus is added so that 4.5% is credited to the protected income value. Our hypothetical example earns 0% in year 2 and 2.5% in year 3. So in year 3, there is an additional 1.25% bonus added, making the 3rd-year interest earned 3.75%. And as you'll see later, this 50% interest bonus is just credited to the protected income value before income withdrawals begin. It can help the contract owner's income as well. Now let's take a look at hypothetical examples of how the protected income value builds over time. Let's assume a 55-year-old purchases an Allianz 222 annuity with a $100,000 premium payment. As you can see, the protected income value is increased to $125,000 immediately by the premium bonus. In addition, each year or crediting period, a 50% interest bonus is added to the protected income value in addition to the allocation interest. The 50% interest bonus does continue after lifetime income withdrawals begin. And in this example, the first year allocation interest was 3%. The 50% interest bonus adds an additional 1.5% so that the credit to the protected income value for the year would be 4.5%. So 4.5% multiplied by the $125,000 or $5,625 is there. In year 2, we see a hypothetical allocation interest of 0%. So the protected income value would remain $130,625. In year 3, the hypothetical allocation interest is 2.5%. So the interest bonus would be 1.25% for a total of protected income value credit rate of 3.75%. That would mean that the credit rate to the protected income value in year 3 would be $4,898, bringing the total protected income value to $135,523. Keep in mind that if no interest is credited in this hypothetical example, the protected income value would remain at $125,000. In this way, the protected income value has the potential to increase until lifetime income withdrawals are started. And please note that the protected income value is only available as lifetime income withdrawals. The accumulation value, which isn't illustrated here, is available as a lump sum, and surrender charges or market value adjustments may apply if taken within the first 10 years, and does not include any premium or interest bonuses. If the contract owner partially or fully surrendered their Allianz 222 annuity during the surrender charge period, it will be subject to the surrender charge and a market value adjustment. These will also apply if the contract owner annuitizes prior to the 6th contract year, or if the annuity payments are taken over a period of less than 10 years. Next, let's discuss the 2 ways Allianz 222 annuity gives the contract owner the potential for income increases through lifetime income withdrawals. The first way for a potential lifetime withdrawal income increase is through interest plus a 50% interest bonus. Anytime after 10 contract years, contract owners between the ages of 60 and 100 can choose to begin receiving lifetime withdrawals from the contract's protected income value. Their initial annual maximum lifetime withdrawal will be based on their age at the time they begin receiving income and whether they would like to have the payout based on a single or joint payout. So the single lifetime withdrawal percentage for a 60-year-old is 4.5%. And after the first year of income, their annual maximum has the potential to increase by the contract owner's chosen allocations interest, plus the 50% interest bonus. The second way Allianz 222 annuity can increase the contract owner's income is with the Allianz income multiplier benefit. It allows the contract owner to receive up to double their annual maximum if they are confined to an eligible hospital, nursing facility, or assisted living facility for 90 days in a consecutive 120-day period, or they are unable to perform 2 of 6 activities of daily living for at least 90 continuous days, yet were able to perform each activity on the contract date. These 6 activities of daily living are defined as bathing, continence, dressing, eating, toileting, and transferring. Confinement or activities of daily living certification must occur after the first contract year and either during the contract year before the start of the lifetime income withdrawals or at any time thereafter. So let's look at an example. Here's Jim, a 60-year-old male looking forward to retiring 10 years from now. When he retires, he plans to travel the world and engage in his many hobbies. He's worked hard and has always saved for his retirement. His financial goal is Jim has only 10 more years to accumulate savings for retirement, so it's important that he protects a portion of his savings. Jim decides to use $100,000 of his retirement savings to purchase an Allianz 222 annuity. He likes the reassurance of knowing that the money he places in his Allianz 222 annuity will be protected from market risk. But Jim also wants to make the most of every accumulation opportunity over the next 10 years. That's why Jim is interested in Allianz 222, which offers 2 bonuses. He understands that to receive the protected income value, including any premium bonuses and interest bonuses, he must hold his annuity in deferral at least 10 years and begin receiving lifetime withdrawals between the ages of 60 and 100. He also knows that he will not receive the premium bonus or potential interest bonus if he partially or fully surrenders his contract, takes traditional annuity payments, or if he terminates the protected income value rider. And he understands there are surrender charges and market value adjustments during the first 10 contract years. Jim's Allianz financial professional explains that bonus annuities may include higher surrender charges, longer surrender charge periods, lower caps, higher spreads, or other restrictions that are not included in similar annuities that don't offer a bonus feature. So let's look at Jim's hypothetical retirement. Since withdrawals from the protected income value cannot begin until after 10 contract years, we are showing 10 years of accumulation and 10 years of withdrawals in the charts in the next 2 slides. The first chart is intended to show how the Allianz 222 annuity works over a hypothetical 10-year period and how it provides opportunity and protection from market volatility. The gray line shows a hypothetical index. And while the solid purple line shows a hypothetical protected income value, and the solid green line shows a hypothetical accumulation value, they are not based on any particular index or crediting method. The dotted lines show a market index scenario in which the indexed interest rate is 0 in all contract years. In this example, there are several years where an index interest bonus applies, and you can see that there is protection when the index is down and opportunity when the index is up. The premium bonus and interest bonus are credited only to the protected income value. To receive the protected income value, including the bonus, Jim must hold his contract for at least 10 contract years, and then lifetime income withdrawals must be taken. Jim will not receive the bonuses if the contract is fully surrendered or if traditional annuitization payments are taken. If it is partially surrendered, the protected income value will be reduced proportionately, which can result in a partial loss of bonuses. Income withdrawals are considered partial withdrawals and are subject to ordinary income tax, and if taken prior to 59.5, a 10% federal additional tax penalty may apply. Because this is a bonus annuity, it may include higher surrender charges, longer surrender charge periods, lower caps, higher spreads, or other restrictions that are not included in similar annuities that don't offer a bonus feature. And please note that while Jim has the opportunity for increases to his accumulation value when the index is up, he may not always receive an increase due to the crediting method calculation. The surrender charge varies by state. Please refer to the Statement of Understanding or state-specific consumer brochure for more information. And note that the protected income value is only available as lifetime income withdrawals and is not available as partial or full surrenders or as annuitization payments. And keep in mind that this represents hypothetical results only, and it may not be used to predict or project future results. The illustrations shown do not represent any particular index and are not meant to be scale or proportionate. Actual results will vary by crediting method, index allocations chosen, cap spreads and participation rates, as well as market conditions. No single crediting method or indexed interest allocation consistently delivers the most interest under all market conditions. With the purchase of any additional cost riders, the contract's values may be reduced by the cost of the rider. This may result in a reduction of principal in any year in which the contract does not earn interest or earns interest in any amount less than the rider charge. So after 10 contract years, Jim decides to retire, and this example shows 10 years of lifetime withdrawal income following the initial 10-year accumulation phase, when Jim would have purchased the annuity. This second chart shows Jim beginning to receive income, retirement income, through lifetime income withdrawals from the protected income value. Allianz 222 annuity also offers the potential for increasing income. And here's how a hypothetical example might look. Keep in mind that this represents hypothetical results only and may not be used to predict or project future results. The illustrations shown do not represent any particular index or are not meant to be to scale or proportionate. Actual results will vary by crediting method, and indexed interest allocation chosen caps, spreads, and participation rates, as well as market conditions. No single crediting method or indexed interest allocation consistently delivers the most interest under all market conditions, and with the purchase of any additional cost riders, the contract values will be reduced by the cost of the rider. This may result in a reduction of principal in any year in which the contract does not earn interest or earns interest in an amount less than the rider charge. So another way Allianz 222 annuity can help the contract owner is to provide choices for their beneficiaries and how they would like to receive the death benefit. Allianz 222 annuity offers beneficiaries the choice of a lump sum death benefit equal to the full accumulation value, or they can choose to take the full protected income value as annuity payments over at least 5 years. In this hypothetical example, using a $200,000 premium, and assuming the contract owner passed away at the end of the 4th contract year, the beneficiaries would have 2 choices. They could take the greater of the accumulation value, the cumulative withdrawal amount, or the guaranteed minimum value as a lump sum. In our example, the $212,180 accumulation value is the greatest lump sum value. Or they could receive the $273,000 protected income value as annuity payments over a period of at least 5 years. In this hypothetical example, we are assuming a $200,000 single premium, a 25% premium bonus, a 50% interest bonus on a hypothetical 3% interest credits plus the 50% interest bonus, which would equate to a 4.5% interest credit, and no withdrawals have been taken. If no interest had been credited during the life of the contract, that would have been $250,000. Please note that if lifetime income withdrawals had already begun, then the beneficiary would receive what remains of the account values. Okay, moving right along here. Thanks for your time today. So we've looked at the ways the Allianz 222 annuity can help the contract owner accumulate money in their protected income value through 2 different bonuses. We've also seen that with the Allianz 222, there are 2 different ways to receive payment increases over the contract owner once the contract owner chooses to begin lifetime income withdrawals to help create a level of certainty for their retirement years ahead. And we've seen the 2 ways beneficiaries can receive the death benefit. Now let's take a look at how the Allianz 222 is flexible. First, the Allianz 222 offers the flexibility to add premium for the first 18 months of the contract. And it also offers the flexible access, in addition to access to the lifetime income withdrawals from the protected income value after 10 contract years, as we discussed earlier. Contract owners also have the flexibility to access up to 10% of their premium per contract year, penalty-free, after the first contract anniversary. And this is how it works. In the contract year following the contract owner's most recent premium payment, they can take up to 10% of their contract's paid premium each year in 1 or more withdrawals free of surrender charges, market value adjustments, and penalties. Also, the accumulation value, which doesn't include either of the bonuses, can be accessed as a lump sum free of surrender charges and market value adjustments at any time after 10 contract years. And for your reference, the surrender charge percentage starts at 10% on the date of contract issue, then, beginning in contract year 4, decreases by 1.25% on each anniversary. So in review, Allianz 222 annuity offers 2 ways to get a bonus credited to the protected income value, 2 ways to increase income withdrawals, and 2 ways for beneficiaries to receive the death benefit. So now you know why they call it the Allianz 222. And as we've seen, the Allianz 222 fixed indexed annuity offers features and guarantees that can benefit the contract owner throughout the retirement timeline. Allianz 222 offers all of the benefits of a traditional annuity, such as tax deferral and accumulation potential, but it goes one step further by offering 2 ways to receive a bonus to the income value and 2 ways to receive increasing income. And if the contract owner should pass away, it also gives their beneficiaries 2 ways to receive the death benefit. Allianz 222 offers benefits to help power contract owners' retirement incomes with no additional fees. In this presentation, we've only covered some of the benefits of the Allianz 222 annuity, and for more information regarding this product, its benefits, and additional features, please refer to the Allianz 222 annuity consumer brochure, the brochure insert, and the index allocation options guide or appropriate variation. I'd be happy to send those to you. If you'd like, just go to our website at annuityassociation.com and contact us there, and I will help you in a timely fashion. Okay, and just some quick disclosures that I'll leave up on the screen. Not going to read those word for word here, but it does reference some of the trademarks and names and things that are used, such as the S&P 500, S&P, NASDAQ, Russell 2000, and the Russell 2000 Index, as well as the PIMCO Tactical Balanced Index and the variations of the PIMCO Tactical Balanced Index, the ER and the regular, as well as the BlackRock IBLD Claria. Last but not least, the Bloomberg US Dynamic 2. All right, so before I end my presentation today, it is important to note that any financial product is only as strong as the company behind it. And as a leading provider of retirement solutions, Allianz Life Insurance Company of North America has the strength and stability to remain true to its promises. Allianz serves over 3.7 million contract owners of products that include fixed and variable annuities and universal life insurance. Founded in 1896, Allianz Life provides innovative financial solutions for wealth accumulation, predictable retirement income, and protection of assets. High ratings from independent rating agencies reflect Allianz's stability, integrity, and strong balance sheet. For a history of Allianz financial ratings, you can visit allianzlife.com. So AM Best rating of A+ is considered superior, and is the second highest of 16 possible ratings and was affirmed in September of 2020. And the Standard & Poor's rating of AA, which is very strong, is the third highest of 21 possible ratings and was affirmed in March of 2021. And then Moody's rating of A1 is the fifth highest of 21 possible ratings and was affirmed in October of 2020. And in the end, contract owners want a company that can design reliable products and provide the stability behind them to last throughout their retirement lifetime. So here's Allianz Life Insurance Company in North America. They're part of a global financial powerhouse. Their parent company, Allianz SE, is the world's 46th largest company, 5th largest asset manager, 3rd largest diversified insurance company based on assets, and 4th largest diversified insurance company based on market value. Allianz 222, is this annuity right for you? And if you're looking for an annuity that can provide an opportunity for indexed interest when the index is up and protection when the index is down, and you are looking for income payments that can increase, Allianz 222 with the protected income rider may be right for you. And if you'd like to discover this annuity more in depth and see how it can potentially be a good fit for you in your retirement plan, I work with clients in all 50 states, and I'd be more than honored to have the opportunity to see how I can help. You can visit our website at annuityassociation.com. Right there on the main page, click the red button to schedule your time via Zoom, and we can get together virtually and bring this annuity and the features and benefits directly to you in the comfort of your own home. So thanks for joining us today. Our mission at Allianz is to secure your future. We hope that we can have the opportunity to do that, and we look forward to serving you in retirement. Again, if you have any questions or you'd like more information on this annuity, you can visit annuityassociation.com, and we'd be more than happy to help. Okay, so I did say before we wrap this up, I did say that I was going to review an example illustration. I will do that here just very briefly, since we have a couple minutes here and we were fairly long-winded. But let me get that pulled up. Let me share my screen and see if we can run down this really, really quick. Okay, bam, bam, here we go. Okay, so we're going to look at two features here, the hypothetical illustration page as well as the guaranteed values page. So we'll start with the hypothetical values. So here's how the Allianz 222 annuity might look over a 30-year period. And the values show what would happen if the indexed allocations earned index interest using current rates in all years. The index interest is based on actual index performance during the most recent 10-year calendar period for the first 10 years. In all later years, the index performance is repeated from the first 10-year period. The laddering strategy maintains the potential for a credit every year while using 2-year allocations. And laddering is achieved by varying the start years of the 2-year allocations between odd and even years. And for the first 10 years, 50% of the 2-year allocation begins on an odd year and 50% begins on an even year. The portion beginning on an even year is allocated to the 2-year allocations corresponding 1-year allocation in the first and last year of the 10-year period. So in this example, this is just a hypothetical example of a 60-year-old male in the state of Florida putting a $100,000 premium into this annuity. And for the index options that we've prepared on this example, bear with me, let me get those for you. We are looking at, actually, we put 100% into the Bloomberg US Dynamic Balance 2 ER Index 2-year point-to-point with a participation rate. And so if we look at these hypothetical values, we'll notice this particular example had this hypothetical client age 60 deferring the income for 10 years, activating at year 11. So if you look to the far right, you'll notice the lifetime income withdrawal column. And you'll see that the income starts at contract year 11 when the person turns age 70. And that starting income value using the hypothetical rates here is $10,977. So again, they're using the most recent 10-year hypothetical performance and projecting them moving forward to determine those values. You'll notice the end of year interest credited column, which is the fourth column from the left. And you'll see how those interest rates unfold. And then you'll also see, because of the interest rate bonuses in this particular annuity, the Allianz 222, you'll see how the credit, the protected income value, a slightly higher credited rate because of that interest rate bonus. So if you compare them side by side, you'll see the differences there where I'm highlighting. And then last but not least, you will notice the end of year accumulation value. So you'll see how that grows over time. And then you'll see that once the income turns on, that income starts to be debited against the accumulation value over time. With that accumulation value going to 0, contract year 23. But income, as you'll see, does not cease, continuing on for the life of the policy, as long as the annuitant remains alive. That's the key caveat there. Okay, so next let's look at the guaranteed page, which is just going to show the guaranteed values on the income benefit should there be no interest credited over the same period of time. So here's how the Allianz 222 annuity might look over a 30-year period. The values show what would happen if the indexed allocations earn 0 indexed interest and the fixed allocations earn the minimum annual fixed rate of 0.10% in all years. The guaranteed accumulation value reflects the maximum allocation charge as shown on your illustration assumptions. After the initial guarantee period, an allocation charge can be only accessed if one of the following criteria is met in one of the 2 preceding calendar years. The average US 10-year Treasury rate for the calendar year is less than 0.5%, and the corporate bond downgrades for the calendar year are greater than 25%. Investment grade corporate bond defaults for the calendar year are greater than 0.5. So you'll see here again, $100,000 going in, but on the interest rate column, you'll see there's 0 every single year. This is just assuming that there's never been any indexed interest credited to the account. And you'll notice that there is a guaranteed minimum income after 10 years of deferral, and that value is $6,250 per year. So you'll see that the one-time bonus is being applied to the protected income value, and that's how it's determining that minimum amount when multiplied by the withdrawal rate that's built into the contract based on the age of the time the annuitant activates the income. So you'll see how that works there. Just to show you the hypothetical and the guaranteed values so that you can make an informed and educated decision. A copy of this illustration will be included in the description underneath this video. There will be a link that you can access this illustration to review it in further detail. So if you have any other questions or you'd like to work together on this annuity, you can visit our website at annuityassociation.com. Right there on the main page, click the button to schedule your free virtual meeting with myself, and I'll be happy to see how I can help point you in the right direction. So thanks for spending some time with us today. Hopefully you'll give us a thumbs up on this video wherever you're watching it today. We would appreciate that. It would help the video get ranked so others can find this informative review to help them make a decision as well on whether or not it's something that they should look at. So thanks so much. This is Jeremiah Conger signing off with Annuity Association. Thank you for joining and have yourselves a great day. Take care of one another. Bye-bye.